Hello guys, welcome back to a new video. So this video is going to be on stop loss and take profit. What are they? Where to place them? I'm going to make it as simple as possible and as quick as possible. So on the left hand side, the green would represent take profit and the red would represent stop loss. Obviously, if price was to reach either of these areas, it would be triggered. On the right hand side, you've got an example if you was taking a sell. So the example on the left is if you was thinking price was about to go up, you would obviously look to place a buy and then hit your take profit. On the right hand side, you'd be taking a sell, so price could be coming up like so, and then something like that. Price doesn't always have to be coming into a level. You could obviously, in this example here, trade up and buy there. And in this example here, price could be trading down and you could sell there. So it doesn't matter which way the market's moving, you can buy and sell at any point. That's the beauty of the market. So obviously that's something to take into consideration. Now, let's just initially look at what we could see from a price action perspective. So there's two examples I'm going to go over. An example where you use limit orders, like what I do, and an example where I use price action, which some people also trade. So what I'm going to do, these are some 4-hour key levels within the market that would be identified on the 4-hour chart. So what I'm going to do is you can see this reaction which happened today. This was a potential trade that played out earlier. If we go into the 15-minute time frame, just for this example, you can see that price came down to that 4-hour key level. Now, price action traders may see price come down into this level and then give off two bullish engulfing candles here. So the price action trader may enter long from this position and buy. Now, if we're looking at this area, what you want to ask yourself are, what are the reasons I am buying? The first reason you are buying is this 4-hour key level. And the second reason you're buying is these two bullish candles here, where I will do that just so we can see it. So in this example here, our stop loss is our last case scenario, worst case scenario. If the market goes against us, where do we want to get out? Now, we don't want to be too tight with this because price can still stop us out before making the move. So in an example like this, you at least want to be covering your first reason, which is the 4-hour key level. And also, if you've got two entry candles here, you also want to be covering them. So the reason being is your stop loss should be outside of all your reasons to take a trade. Regarding your take profit, assuming you are trading the 4-hour time frame, you may look to target other 4-hour key levels. So the price action may just be your entry. Your actual take profit strategy may well be around these key levels. So why is this a key level here? You know, you've got resistance there. Resistance there, break, retest, support. So for that reason, you may want to target 1 here for 3.2 and target 2 there with obviously the 2 areas of resistance. So that's something to take into consideration. If you are trading price action, you want to cover the level and your reason for entry on the price action. Okay, so now let's go over a pending order and then we'll see what the difference is regarding setting these. If we look at this example here, this is going to be for pending orders. Now, if you are using, pending orders, limit orders, whatever you want to call them, you are basically setting an order before the market reaches a level. So on the left-hand side, if you are buying, you are obviously going to limit an order from above. And if you are selling, the market is going to be pushing up into your area where you want to sell. So that is the difference when it comes to this. So if I quickly just go to Euro Australian dollar and break down a trade that we took last week in the group, if we just have a quick look, I'll replay it from this point before it was triggered. So when we were trading this example here, I sent the trade to the group in the morning, basically before it had happened. So what were my reasonings for this trade? Well, I had a key level here, which was being broken and retested. If you look to the right-hand side, I had the round number of 1.6150. I also had the 50 Fibonacci, and I also had this EMA pushing down. So when I am looking at this example for a pending sell, I want to cover all confluences, okay? So my first confluence is the fib. my second confluence is the key level, the third is the round number, and the fourth is the EMA. So if I'm looking to get into this position here, I want my stop loss to be at least covering this area here. So you can see that it's 17 pips, the area itself. You may want to go 20. Me personally, I like to add a little bit more just to let the trade breathe, potentially, if price wants to create a wick. And you can see as it plays out, this area is getting smaller. So what I can start to do is move my stop loss further in if that's what I want to do. You can see there, price has triggered you in, and there you go. So because this was obviously a pending order, you can see that we did profit in the group. I did send this before it happened, but the stop loss was just accurately placed outside of my confluences. Like with the price action, if you are trading, engulfing candles, stuff like that, you want to cover the level and the engulfing candle. The reason for this trade is all these confluences here. So for that reason, my stop loss should cover them all and give the trade a little bit of area to breathe. There's no point me looking at this example here and saying, for example, this is my area, I'm going to put my stop loss there, because price can still react off the last confluence. And if you'd have done that, you'd have been stopped out before the price actually went in the direction you wanted it to. So don't be afraid to have a little bit of a larger stop loss. I know you see all these people online with the 1 pip stop losses, the 2 pip stop losses. As you get more and more into trading, you'll realize that that is really not the way to trade. Let your trades have a bit of room to breathe. Manipulation does happen. Price sometimes does go off the last confluence instead of the first. It's not always perfect. And by doing this, and then in this situation, you can have your take profit strategy. You might have a fixed take profit. So you might say every single trade, when it comes to pending orders, I want a 1.5, which is where I personally take TP1. Or you might say, you know what, I'm going to target the low because price is trending down and I expect price to break the low here. So when it comes to your take profit, you can either use fixed methods or you can also target structure. Things like, this previous low here. You might say, well, I want price to go there. You've got a 2-to-1. So there's many different ways to do it. But I would say the main thing takeaway from this video, let your trades breathe. Don't go too tight with your stop losses because you are going to take a lot of unnecessary losses. Yes, your winners may be reduced in risk to reward due to the fact of that, but you're going to take less losing trades, which is going to most likely lead to less bad examples and decision making when it comes to your future trades. So I'm hopeful that this video helped a few of you. If it has, please just leave a like and I will see you in further